Hi, hello friends. Welcome everyone to Nifty Banker 2.0, India's first retail index traders online conference. I am Ashok Devanampriya, the CEO of Traders Gurukul and also the host for your today's program. It's a great pleasure to invite every one of you into Traders Gurukul event, Nifty Banker. I'm sure by the end of today's program, you will have interesting knowledge about the story of time because you guys are more exposed to the concepts of price, volume, open interest. And in today's session, you will have a different perspective, and that's more to do with time. Let me thank our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website, who helped us to reach a wider audience in a short period of time. Let me also appreciate our title sponsor Espresso, the Sher Khan Company, one of the leading discount brokers in India. Friends, the speaker for today is Mr. Anant Acharya from Mumbai. He's the founder of Applied Elliott Wave. He is a veteran of financial markets with deep understanding of behavioral finance patterns and cycles. He has done almost 18 years of research on markets and 28 years of hands-on experience. I would call him a maverick, an evil genius. I have fought with him on various topics so many times in the public domain. Okay, we like him a lot for various reasons. We also hate him for certain reasons. He is one of the well-known person in the domain of time cycles. Okay, he's going to empower us with his special topic, the story of time. Guruji, on behalf of Traders Gurukul, Money Control Pro, Espresso, I extend my warm welcome to you into this program as an elite speaker. Go ahead, Master. The stage is yours.
Thank you, Ashok. Good evening, everyone. I hope you are having a great time. Had a wonderful holiday. And let me kick off the video first so that I can get to the point. Rather than giving an intro of myself, I have something more interesting lined up. So let's kick off the program and start. How does this play now? Oh, God.
Just right click and trigger.
Ah.
Or you can escape and restart.
That's it. That's the only thing I have.
Money Control Pro. Espresso, a Sher Khan company. And Traders Gurukul. Present Nifty Banker 2.0. India's first retail index traders online conference. Session 12. Ignite your way to massive profits, trading indices. January 26, 2022, 8 p.m. to 10 p.m. This session will be presented by Anant Acharya, www.anantacharya.com.
All right, now that was a good one. Rather than do an intro of myself, I have a short video for everyone. Post the introduction, I will do a small demonstration on how the markets can be timed, and I hope I will show you something very interesting. And then I will show you how I did the forecasts of on the market. And then I'll also share you the Excel file which you can use from tonight, tomorrow, whenever you want. So to get on immediately. It is absurdly simple, and once you realize how simple it is, you will want to know more. And so with that said, let's start with the introduction.
Hello, my name is Anant Acharya, and chances are you have not heard of me. However, you will be glad you heard from me today, because I am going to amaze you with a different view and show you why you have been losing money in the stock and financial markets. I have had the opportunity and the privilege of trading the markets for over 3 decades now, of learning trading from some of the best traders in the world. and the opportunity to share my discoveries and methods across the globe in 4 continents and many countries. To present hands-on trading workshops and seminars to over 4,000 traders and investors hailing from the US, Europe, Asia, and Australia. Today, I live a life of plenty, a life each one of us dreams of. A fabulous large house staffed to make my life so comfortable. A dream car, holidays all over the world, and never having to worry about money for the rest of my life. I have made the markets my ATM, a self-reloading ATM. You too can. And all this has been possible with a few discoveries I made about the markets. The secret language of the markets, a method so simple, so elegant, and so clear. You will be surprised to learn that every one of us can make the money we so desire. Your desires can all be fulfilled. You too can live the life of your dreams. Before I go into the presentation, let me tell you a bit of my experience in the financial markets. Like most people, I too started with knowing nothing about the markets and jumping headlong into trading. The result? Nothing different from the average trader. I too had my moments of euphoria and moments of abject failure, of making a lot of money and losing a lot of money, letting my losses run and covering my profits too soon, seeing my stop losses being hit, only to discover later, had I stayed in position, I would have made a lot of money. And as like most of you, next time I did not respect my stops and seen my account being wiped out. I was the regular victim of the market, one who gets trapped and loses most of the money. Always wondering, is there a better way? Do people really make money in the markets? On first glance, it appears very simple. Stock prices have to move up or down, and one can either buy or sell. What can be more simple than that? There is a 50-50 chance of failure to success. Alas, it took a few years and humongous losses to understand that it is not as simple as it looks, unless you know the real language of the markets. And then I heard about Albert Einstein, the most intelligent and the most logical, and his experience in the stock market. He invested most of his 1921 Nobel Prize money in the stock market, and he lost most of it. Now, my thoughts were, if Albert Einstein could not make profits in the market, do average people like me have any chance? Does anyone really make money in the markets? Is there a surefire way to make money in the markets? Not willing to give up, I embarked on a journey of discovering how the markets work, and it appeared so perfect. I felt once I learn these methods, I will be making money like the masters. After all, if they have done it, I too can do it. I bought a bunch of books and immersed myself in learning. I set about learning the different ways of trading the market, and within a couple of years, I was back to square one. All the knowledge I gathered gave me no wisdom, no real way of knowing what is about to happen, which way the markets are going to unfold. Not a thing changed in my trading. It was the same. I appeared to be wiser, to know more, and could explain everything happening in the market, just like we always do, after it has happened. But it gave me no edge, no advantage, no practical way of making profits. Yes, I now sounded intelligent like the so-called experts on the television in the media. But was I making money? Showing profits in my trades? No. not a single cent to show for my effort. Trading was still the same. I am sure most of you have gone through similar situations, felt the same emotions, sometimes getting desperate, wringing your hands in despair as you lose your hard earned money. And then, one awesome evening, I had an angel show the way, throwing light in the most unusual fashion. She was then just 13 years old. And as I was studying the markets, she came and pointed out the secret message of the markets. While not knowing what she was saying, but one simple sentence changed my life. The secret of the markets that was well hidden right in front of everyone's eyes in broad daylight became clear, and I started viewing the markets in a different light. I spent the next 6 months re-looking at the markets and discovered how easy it is to treat the markets, just following the hidden order, the hidden message of the markets, and putting profits in my account again and again as I watched my account grow in a matter of just 51 trading days. I had a 107% profit, and I realized I was onto something big. And it has been a one-way journey from then on. Let me tell you now, there is a way to make consistent profits, consistently making money, to be on the right side of the markets, and show phenomenal profits. Profits you never thought possible, profits you never imagined, profits that will let you live the life you dream of. And take this small journey with me today. Stay with me till the end of the presentation, and I will show you how you too can become the successful trader. You too can make the markets your self-reloading ATM, and you too can live the life of your dreams. You will be living in a house you dream of. You will become a profits attracting magnet. I have even taught a 7-year-old child to read the language, so you can imagine how easy it will be for you. The markets are simple. We make them complicated. Primarily, all of us picked some wrong ideas and notions of the market. Right in the initial days, through the media, listening to the so-called experts of the markets, reading the free stuff. And in our journey of trading, we pick up so many ideas, notions, and logical explanations. And these are the very ideas that hamper our way to profits. We all agree, and we hear this often, the markets are illogical. They appear to not follow any rules and appear completely random. We all agree that there can be no logical explanation to the markets. They seem to defy every known logic and flummox even the most logical of men. Yes, when it comes to our own trading, we approach this illogical problem from a logical standpoint. If logic were to yield us trading profits, then every person approaching the markets from a logical standpoint should be making regular and consistent profits, and mathematicians would be billionaires. But we see the opposite to be true in most cases. But like a blind bat, we still continue to seek logical solutions to this illogical problem. Don't you see that this approach is doomed to failure right from the beginning? Don't you feel this approach will only lead to more regret? Think about it.
Okay, I hope that gave you some idea of asking questions. Why did the market fall? Why did the market rally? What happened suddenly? Well, truly speaking, nobody knows. If somebody had an answer, he would be trading the market. He would not be explaining it to you. Now, let's move to the next slide. And in this session, I will be showing you about 7 different things. The first one is the truth of what you are actually facing every day. and this should hit instantly. And after that, I will show you what is a trend change, and then I'll explain what is time. After that, we will look at something which I call the moon cycles and what actually is to be seen. Then we will apply the moon cycles on some charts, and I'll show you some charts and show how we apply a simple sequence of numbers on the market. Then we will look at what is called price time squaring. I'll explain all of this when we come to that particular part. Then we will look at applying price and time squaring. And these 7 will complete our whole session today. And by the end of this, you should have a wonderful idea of being able to forecast when the markets are going to change the trend. Okay, using this, you can trade practically everything from the indices to the stocks to commodities to forex. But today, being the focus is on indices, so we'll look at indices. All right. Now, before I move ahead, Ashok, are you here?
Yes, sir. Go ahead.
Can you now, if any, you can take it in writing from the participant. Any one of them can give any stock. I don't want to know the name. Just need one major trend change date of the past. You know this. We have done this earlier for you.
Okay.
Any date in the last year or 2 years back, and I will give 20 trend change dates. Then you give me the name. We'll pull up the chart and we will see if these dates worked or not. Then I will show them how to calculate it.
Okay, so you want the major
Anyone
reversal
from the audience pick up any, you will know this share maybe, or you can just pick up the date. Once I give the data, future trend change dates, then they can name the stock so we can pull the chart.
Okay.
Now, I have just pulled on an Excel sheet. That should be very clear. Now give me a date from anywhere in the past.
Okay, Sanjeev Gaur says 16 Feb 2021.
16 to 2021. Now it's all there for everyone to see. Can you see the dates of the past? Now, if you can tell me which instrument is this, we will pull up the chart.
Sanjeev, tell me which instrument is this?
The dates are already there. I haven't done anything.
Sanjeev has left.
Okay. Anyone else want to give a date?
Okay, Kailash Kant gave 14th October 2020.
It should be a major
Major reversal.
Okay.
Yeah.
Yeah. It should be a major trend change date. Okay. 14.
Okay,
now give me the name.
Which is the name, Kailash? Nifty. He says Nifty.
Nifty. 14th October 2020 was it? If you tell me Nifty, it is so easy. Nifty is right here.
Or should I give something else?
No problem. 14th October, I hope it's a trend change date. Sometimes they pick up any trend change date and give. This is not even 14th October. There are too many dates. Anyway, 14th October, then I have 12th November. Let's see what happened on 12th November. 12th November, we were here. The market just took a pause. I would say it failed. Then 24th November, this is where you are on 24th November. Then you have 4th of December. That is right here. Go on 12th of December. See the problem here, you see he has picked up a date right in between. I would want a date like this.
Okay, sir, take this one. I think let me take the control of this scenario. That is much better. 23rd March 2020.
That is for everyone. It is the same thing.
Is it?
23rd March 2020, Nifty put the major bottom. No. For all of it, it is the same thing.
Okay.
So you are 23rd or 24th March 2020. Okay, you go on.
Okay, I
All
will do
right,
one
we have
thing.
21st
Can I
April.
give you 5 years ago, 1 or few years ago, couple of, or you want only couple
Here
of
you
years
have
ago?
21st April. 21st April. Market dropped on that day, and then again the next day it started. Then 3rd of May. Then you have here 3rd of May. This is 30th April. Then 3rd of May you did not have a trading day, so the next day the market started coming down. Then you have 13th of May. Now 13th of May will be here. You see 13th of May, it put a high and trend changed again. Then you have 21st of May. Now here is 20th of May. It started off one day before. Then you got 28th of May, which will be somewhere here. 28th of May. One day before it started going up after a sideways move of 3 days. Then you have 14th of June. Now 14th of June would be here. This is 12th of June and 15th of June. Now you see 14th of June. Then you have 19th of June. Now 19th of June should be here somewhere. It went then on 19th of June. There was a double. 2 times it put in the same one and went off. Then you have 7th of July. 7th of July will be somewhere here. See, it stopped going up here. Then there was a sideways trend for a few days. Then you have 19th of June, which is here, 17, 18, 19. Okay, then you have 5th of August. Now 5th of August should be here. Here is 4th of August, one day before, started going off from 5th of August. So if I had 5th of August from 4th of August, I would be watching the market. Is there going to be a trend change? It was down for 4 days and it changed. Then you have 17th of August. So you have, here is 17th of August, 4 days down. When everyone is worried, next day it's put in a bottom. Then you have 11th of September. Now here is 9th and this is 10th of September. We had a trend change to one day before. Then you have 16th of November. Here is 16th of November. You have the exact top. 16th of September. You had the exact top. Then you have 15th of October. 15th of October. 15th of October will be here, right here. See, this is 15th of October. Then you have 28th of October. Here is 29th of October. And then you have 14th of November. Here is 11, 12, 13, 14th of November, 14th, 17th, it put in a top, went sideways for 3 days. Then you have 13th of December. So here, now this one failed. Okay. Then you have 26th of December. Okay, 2020. Now this is Nifty. Actually, we are working off on 24th of the date of 24th. Then you have 12th of January. Here is the top of 13th of January. Okay. Then you have 10th of February. Then here you have 8, 9, 10th of February is here. This entire rally stopped here for a couple of days. It went down. Then you have 12th of March. Now 12th of March will be somewhere around here. You see the high you got on that day? Just by taking one date. How many hit? Maybe you give me something much more challenging. Nifty is so easy. 23rd of March is very easy.
Can I give you one? Can I give you a date in 2016? Is that fine?
Oh yes, of course.
Okay, 7th September 2016.
I don't know which one you are talking about. 7 September 2016. Okay, 792016 here. That is all I did. Now let me pull up the Excel. 2016, 7th September. Again, you are giving Nifty.
No, it is not Nifty. It is Tata Motors.
Okay, let us pull up Tata Motors then.
Yeah, let us review Tata Motors now.
Motors. Okay. So I am not touching the date at all. The Excel sheet is right there. Here is 7th September. Okay, next date is 6th of October. Here you have this on 7th of October. Okay, 1. Start counting, 1. Then you have 28th October. 27, 28th October. This trend stopped. The 2 days of uptrend stopped here. Okay, then you have 5th of November. Then you have 5th of November is here. 3. Are you counting?
See,
Then
I'm
12th of
checking. I'm equally parallel checking. 5th of November passed.
12th of November. We have this on 11th of November.
Yeah.
And then you have 15th. 12th, there was no trading, so we started one day earlier. Okay.
29th November.
29th November. 29th November will be here. Okay. 29th November. You may call it passed or failed. There are different ways I will show later. Then 4th of December. Here. What do you have?
4th December is Pakka bottom. Yeah.
Okay. 4th December. Then you have 22nd of December. That's somewhere here.
20s.
I would call 22nd. Was it 22nd of December? Yes, 22nd. Then you have 3rd of
That
January.
is dry. That is just a inside candle. We can ignore.
Yeah.
3rd
3rd of January also did not work. I will show you how later in the presentation why it did not work and what to do when it does not work.
20.
This particular thing will take effect later. I'll show you how simple it is. Then you have 1st of April.
20, yeah, 20th Jan. That is reversal. No problem.
20th Jan is reversal. Already
It
checked.
gave a negative candle and went up. Okay. First
Okay.
Feb, I'll see.
Then 1st Feb. This
First
is
Feb is
30th
also
Jan.
reversal. Okay.
Okay, this is 1st Feb. Okay, then where are we? Then 1st Feb, 26th Feb. This is 26th, 24th, and then 27th Feb. 26th
Okay.
is right in between here. Okay. Then you have 3rd of March. Okay,
I don't see that failed. Yeah.
1st April.
Even that failed.
1st April is here. Okay, all right. Then you have 14th of April.
14th April.
It came in one day before, 2 days before.
No, 14th of
Right.
April is stuck. It's a proper downward trend. There's no reversal in 14th of April.
Okay, then you have 1st of May.
1st of May.
Here.
Yeah, 1st of May is reversal. Agree.
Okay, then you have 1st of May. Then you have 30th of May. Here.
30th of May is also top. I agree.
Okay, then you have 12th of June.
12th,
One day
12th
later.
of June is not a top. Yeah.
Bottom. One day later. You can see on the chart.
Okay.
Yeah. Then you have 29th of June. Here. 30th of June. So it's
28th
stuck in
of
that
June.
area. This is 29th of June here.
Yeah, there is no change there.
Stuck in that area.
It's still a downward trend. There is no reaction there.
Oh, you don't expect a reaction exactly on that point. I'll explain that later. 28.7. So this is here. This is what happened. Okay, then you have 27th August. Here.
24, 25, 26.
27th August. Now the point here is we are working on just one date. By just taking this one particular date, that's it. So the market has a lot more other data to give us. So using that data, I'll explain how to actually do this during the presentation today. Okay? Sure. Now let's move ahead with the presentation. The next one is we will see what I call the truth. This is what you are actually facing. This is what is happening every day with you. Let's see this.
Here's the truth. The odds are 100 to 1 against you buying a stock and see it moving in your direction. In fact, you buy a stock and see it moving in opposite direction, or sell a commodity and see it rally in dismay. You spend many nights waiting for the markets to move in your direction. Sleepless nights, nights spent thinking why you even took the position, regretting the moment you bought or sold, only wishing you could go back in time and somehow do the opposite action. You are spending precious and important time thinking about the market, time that you should be spending with your wife, your girlfriend, or your children. Your work is also suffering and you're in constant agony. Sometimes you even closed your positions, only to see it rally as soon as you are not participating in the market. You keep wondering, why does this happen with you? Blaming your luck, or the many other reasons we often use to console ourselves when we do not know the reason. And while you fret and fume and feel the gut-wrenching pain in the bottom of your stomach, you see other traders jumping in joy, ridiculing your choice, making you feel terrible, and the media adds to your agony further by telling you the markets are headed in the opposite direction. There is no end to your anxiety. You feel you will be right. The turn is just round the corner, and your losing position will turn to a winning one. Yet, day after day, markets keep moving against you. You have lost all appetite and can think of nothing else except your position in the markets. But why does this all happen again and again, and you seem caught in this trap? Here is the truth. One of the biggest reasons you go through all of this is you pay attention to only price. You disregard the other half of the equation, time. If you understand and observe carefully, there are two axes to a chart. The y-axis shows the price movement, and x-axis shows the passage of time. Traditionally, most analysts keep looking only at the price action and its derivatives, while ignoring the x-axis completely. You too have fallen trapped to the same approach. You do not know how price and time are similar quantities. You have not seen how price always indicates the time cycles of future trend changes. You do not know that price and time are interchangeable. But that's not the end of the problem. It actually gets worse. Here's the real problem you're facing. All your life, you have heard that the markets cannot be timed. Nobody can time the market. The media, you broker, you financial advisor constantly tell you the same thing. In fact, they keep repeating the same thing over and over again. Think about it. 300 years ago, Galileo was almost killed because he said Earth goes around the sun. In those days, everyone believed the sun goes around the Earth. Today, we would laugh at anyone who said that. Many concepts that are accepted as facts today will be challenged and disproved in the future. And worst of all, as you hear it often, you start believing it too. As Lenin said, a lie repeated 1,000 times starts sounding like the truth.
Okay, now
Here's the truth.
how many of you
Here's the truth.
identify with this? I bet almost all of us go through the same scenario every time, and we keep believing it cannot be done. Now here, you will start doing it from today. But before we do that, there is one more thing that you need to know. That is, what exactly is a trend change? The video will explain it more clearly. Then when it comes to the practical session, I will add a whole lot of other things. Let's have a look at the video.
Behavior on trend change days. What exactly do we mean by trend change? Whenever this question is asked, many traders, even the experienced traders, are at a loss or express only one behavior. A rising trend turns down or a falling trend turns up. Because of this misunderstanding, they tend to miss the cycles that are so clear in the markets. There are 6 kinds of trend changes in the market. 1. A rising trend turns down. 2. A declining trend turns up. 3. A rising trend stops and goes sideways. 4. A declining trend stops and goes sideways. 5. A sideways trend turns up. 6. A sideways trend turns down. Thus, there are 6 different actions that the markets unfold on trend change days. Once we understand this clearly, we will be able to see the cycles in the markets easily.
So you got it, Ashok? You're also doing the same mistake when we
Yeah.
look at the trend changes, because there are many different things which happen when the trend changes. Sometimes it happens quite about 20% of the time. The trend will continue in the same direction, which is also a trend change for us, meaning that the speed will pick up. Sometimes the market appears to be just moving at a very few points in a day, and then suddenly out of the blue it just starts running away. That is also a change in trend. But those are subtle concepts which will take a long time to understand and start applying. But today we will see at the basic ones. And Now we will come to the most important question of what is time, because we all understand what is the time. The time is such and such. Today's session is at 8 o'clock. But where did this 8 o'clock come from? Why do we call it 8 o'clock, 7 o'clock, whatever? Have a look at this, then I'll put all of that slowly together.
What is time? We all know the answer to the question, what is the time? It is such and such by the clock. But when asked, what is time? We truly do not have an answer to this question. Mankind has been obsessed with time and watches from time immemorial. Hourglass, water clock, sundials, moon-faced clock, and whatnot. It's an amazing array of instruments we developed, to the atomic clock, in an endeavor to measure time precisely and perfectly, to the millionth of a second. Yet, till we do not have an answer to the question, what is time? Till we do not understand it, we cannot devise methods to use it to our advantage. Imagine, in the ancient era, thousands of years ago, how would a man agree to meet another man the next day? Imagine it to be an era when even the concept of a day was not formed. They would agree to meet the next time the sun was overhead, or something like that. This was possible because they observed that the sun goes around the earth regularly and keeps coming up overhead again and again before going below the earth and coming up overhead again. They were certain the sun would be up again. The ancient man had a great curiosity and observed the sky every night and wondered in awe at the marvel of the starlit sky. And soon he noticed several moving objects, what we today know as the planets. The moon, of course, used to light up the nights, and it was the second great line after the sun. As the ancients started noticing things in the sky, they soon understood that when it was light, they could see everything and could gather food, hunt animals, and generally it was to their advantage. And during the night, the wild animals could see better with their nocturnal vision, and they were attacked by the beasts, and they were generally unsafe. Thus, man made his own rule. Light is good for him and generally beneficial, and therefore light was good and darkness was evil. White became good and black became evil. The angels wear white and the devil wears black. Many of the concepts we even use today and are generally accepted are centuries-old beliefs and traditions. To come back to our point under discussion, man used the sun initially and the regular feature when the sun was overhead and the brightest became the midpoint of the day, and the period sun came back to be overhead again was one day. They also observed that the period between two noons is similar to the period of two occurrences of the sun rising on the horizon, and soon noticed the similarity between the period from the rising sun to the overhead sun to the setting sun, and they started formulating the concept of time. Simply put, the duration between two similar events is called time. Note they are not the same event, as we normally use colloquially. They are two similar events, but not the same. Every event occurs only once in existence. The same is never repeated. A series of existences is what we call the passage of time. Thus, for our understanding, time is the duration between two similar events. We can now also develop this thought further and say, time is the duration between two recurring events with different periodicities, and developing further, time is the duration between many recurring events with different periodicities. Now the ancients initially started with calling the sunrise the beginning of the day, and thus the duration between the sunrise to sunset as the day, and the sunset to sunrise was the night. Then they went further and divided the period between the sunrise to sunset into two halves, with the sun overhead, dividing the entire day into two halves. Thus, we had the morning or sunrise, the midday or noon, and the sunset or the evening. These parts were again divided into two parts, and these two were again divided into three parts. Thus, morning to noon, had 6 parts, and noon to evening had 6 parts. Now the sun was called Horus by the Egyptians, and the parts from morning to evening started being called the first Horus, second Horus, third Horus, and so on. Soon the Horus became hours. To this day, we call 1/6 of the period from sunrise to noon the hour. Now let us move to the moon. The ancients also observed the moon. They noticed that the moon grows and becomes bigger, and then shrinks and disappears, and then starts growing again. It fascinated them. They saw that the duration between the full moons were approximately 29 to 30 days. The full moon was called the mooneth, and from mooneth to mooneth comes month to month. The period from full moon to the disappearing moon or the new moon was about 14 to 15 days, and it became the period of a fortnight. Now this needed to be divided again, and the observation that the moon is semicircular in shape, the half moon, right between the new moon and the full moon. So the period from the new moon to half moon, the half moon to full moon, from full moon to half moon, and half moon to new moon, divided the month into 4 parts, and thus the week of 7 days was marked. Moving further, the ancients used to grow barley and corn. The ears of barley and corn are harvested once a year, as we know now. But in those days, it was from harvesting the ears of corn from now to the next harvesting time. It was observed to be 365 days, and thus the term ears of corn came into existence. This soon became years. The next observation was, in the whole period from harvesting the ears of corn to the next harvest, there used to be 12 moons, and thus the year got its 12 months. To this day, we follow this system because it not only follows the systems of nature, but it also is a reliable indicator of the seasons and the events across the universe.
Okay, Ashok, I just want to take a feedback. Is everyone able to see their screens?
Yes, they can, sir.
Yes, no complaints whatsoever, because for me, the one is showing audience view 100% negative.
No, don't worry about that.
Okay, okay. So now you see, we understand that everything that the ancients did, we still follow. Truly speaking, if you do some research, you will understand that even the broad gauge and the meter gauge trains which we still use are based on what the ancient builders of Rome used to use. They are the same measurements even today. The month, every month you get a salary. Every month there are a lot of things happening. Every month nature changes. It is all based on a planetary movement. The time is nothing but the movement of the planet and coming back to the same thing. As we said, time is the period between two similar events. So the first similar event is a full moon. The second similar event is a second full moon. So between that is 29.53 days. So those 29.53 days were the actual month. But the most surprising part in all of this is, once you start understanding this and looking at the markets with this newfound understanding of what is the natural month, we humans appear to behave in a similar manner when the same time comes. Okay, so there are certain other derivatives to it which we will see, but then that is how nature works, and that is how we also seem to work. And this seems to have a strange coincidence with the markets, and it has been happening for well over 150 years of whenever the market, whatever market data I could gather. And when we started actually studying the cycles and studying what is happening, it was very strange. I'll tell a few more things at the end about how the other cycles come in. But in this presentation today, I'll be talking about the moon cycles. So let us see how the moon cycles are calculated, and what are the derivatives, and why do we do that, and how to actually calculate it so that you can do it yourself. And then we apply it to the markets. Then I'll show you the chart, and I will show you how you too could have forecast yesterday's turn of trend. let's move to the next slide and see the moon cycles. Okay, now let's see the moon cycle and its effects.
The moon cycle and its effects. The moon moves around the Earth, describing a complete circle in about 27 days. However, in this period of 27 days, the Earth itself has moved another 27 degrees ahead. In comparison to the sun's position, the moon takes another 2.53 days to catch up, and the sun, moon, and Earth align in a straight line. When the sun's light is illuminating the full face of the moon, we see it as a full moon. So the duration between a full moon and the next full moon is about 29.53 days, and we call this a month. However, Earth takes 365 days to go around the sun, and the moon takes only 354 days to complete 12 cycles, leaving a balance of 11 days to complete the solar cycle of 365 days. Hence, to manage this, extra days were added in the calendar months. But irrespective of that, markets strangely are synchronized with the lunar cycle, and it has a typical behavior in its effect on the financial markets. The basic moon cycle is multiples of the lunar month, which is 29.53 days. Thus, we get the 12 monthly dates of moon cycle as 1 times 29.53 equals 29.53 days. 2 times 29.53 equals 59.06 days. 3 times 29.53 equals 88.59 days. 4 times 29.53 equals 118.12 days. 5 times 29.53 equals 147.65 days. 6 times 29.53 equals 177.18 days. 7 times 29.53 equals 206.71 days. 8 times 29.53 equals 236.24 days. 9 times 29.53 equals 265.77 days. 10 times 29.53 equals 295.30 days. 11 times 29.53 equals 324.83 days. 12 times 29.53 equals 354.36 days. This is the basic moon cycle of 360 degrees cycles. We now also need to add a harmonic and geometric progression to this series of numbers. To get the harmonic and geometric progression, we take the Fibonacci series of numbers 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144 and calculate the square root of these numbers. The square roots of the Fibonacci series of numbers to 144 are 1, 1.414, 1.732, 2.236, 2.828, 3.605, 4.582, 5.830, 7.416, 9.433, and 12. In the next step, we take these square roots of the Fibonacci series and multiply it with the moon cycle of 29.53 days. Thus, we arrive at 12 numbers that appear entirely random and disconnected. They are 29.53 days multiplied by 1 equals 29.53 days. 29.53 days multiplied by 1.414 equals 41.76 days. 29.53 days multiplied by 1.732 equals 51.14 days. 29.53 days multiplied by 2.236 equals 66 days. 29.53 days multiplied by 2.828 equals 83.52 days. 29.53 days multiplied by 3.605 equals 106.47 days. 29.53 days multiplied by 4.582 equals 135.32 days. 29.53 days multiplied by 5.830 equals 172.18 days. 29.53 days multiplied by 7.416 equals 219 days. 29.53 days multiplied by 9.433 equals 278 days. 29.53 days multiplied by 12 equals 354 days. As both 29.53 days and 354 days also figure in the earlier list of 12 dates, we use them only once and merge both the series into one. We now have a series of 21 unconnected and seemingly random dates that are well connected and reflect periods in the moon cycle that are likely to be significant trend change dates. As the cycles are not always perfect numbers, we should allow for slippage of plus or minus one trading day. If the trend change dates fall on a weekend or on a holiday, the earlier trading day or the next trading day is likely to produce a trend change.
Okay, followed. Can we take a feedback, please?
Sir, probably we have to use these dates to apply for an example, because people have not, they have understood how to calculate these dates. Now, how to apply these dates?
Yeah, that is the next step in the presentation, because when I showed all the 7 steps that I'll be talking today, after the moon cycles was moon cycles applied. So that is the next step. So any feedback so far? All okay? Should I move ahead?
Yeah, please go ahead.
Go ahead. Okay. All right. Now we will look at very few charts which I have prepared. Then we can take from the audience whatever chart they want to look at. I'll pull up and I'll show you the 29.53 days. So here initially I am showing only 29.53 days, but all the other dates will work. So have a look. Then we will see what is to be done. Now here's Nifty, which is the most recent action till day before, till yesterday, not yesterday, the day before. This slide was captured the day before, and it was very. I was very sure that we will have a trend change here, but now let's see. Now here's the trend change. The date was 20th of December 2021. So what do? Very simple step. The first moon cycle date is 29.53 days, or ballpark between 29 and 30 days. It's exactly 1 month. So at 29.53 days, very simple. Do you know what date you get? The date is 19th of January 2021. Okay, now what happened on 19th of January? This. Interesting. How many could have said, okay, tomorrow the market's likely to change the trend? And here at this exact point, it was at an earlier resistance where it had taken and got beaten down. So if you are using your understanding of the chart, you can see there's a difference in the oscillator, there's a difference in the RSI, there's a different things happening here, and you could have many confirmations here. And even when it broke the low of the earlier green bar, that was the perfect time to go short on this market, expecting a deeper retracement, which is what actually came in the next 4 days. It really crucified everyone. Okay, now let's move to the same one applied on the Bank Nifty. What do you think happened on the Bank Nifty? This was a trend change day, which is again 20th of December 2021, and then you add 29.53 days. And when you add 29.53 days, you get the same date. Now what happened on that day? This is what happened. You see, there was a big spike up that day, and it came down along with the Nifty, and both of them were so very well synchronized. Some days you will see Bank Nifty is moving in a different direction than Nifty, and then Nifty is moving in a different. But on the trend change days, most of the time they will always be synchronized. So that's a key point. When both of them get synchronized, you will see normally you will see a change in trend. Okay, that calls in for a deeper, subtler study, but yeah, things that you can look for. Then, how could you have forecast this date here yesterday that the market would change the trend? If you see and you go back here again to the next one, post this, there was one more bottom where there was a change in trend. And okay, if you calculate from here, yes, there was no change in trend. 29 days later, it missed, but then that happens. But if you keep a watch, the next date you get is 27th of December. So 27th of December. So today was a holiday. So we got a, sorry, this was 27th of December. Sorry, I'm sorry, 27th of December at 29.53 days. And you get the date, what, January 25. What happened on January 25? If you knew this, could you have made a ton of money? Of course you could have. Don't need an answer. It's as simple as that. Then we'll look at Nifty, which is what Ashok gave the number even when we were looking at. So you had this here, 24th of March 2020. And then you had at 29.53 days, you get April 22nd. And what did you have? This is the date. This is 29th. Now that you understand what is a trend change, see the sideways trend change of all these days was stopped on that day and the market started going up. So if you just went in long on this day at the high of the previous day and kept a stop below the low of the previous day, you could have captured easily 4 times this day's range. So that is how your risk reward becomes 1:4. And even if you correct only 3 times out of 10, you'll still make a ton of money. Now let's look at the Bank Nifty at the same point. What happened? Here was the trend change day, which is the same 24th of March 2020 at 29.53 days. You get April 22nd, 2020. And again, the sideways move stopped and then the market started going up. Very simple. Now I'm taking back on the moon cycle itself. Again, so far I'm just applying 29.53 days. No complications, nothing at all, nothing to remember, nothing to study. It's as simple as this. Now here's January 29th, 2018. Then you add 29.53 days. What do you get? You get 28th of February 2018, a perfect top. Right. So you can, if I don't know, I'm sure almost every software these days has a way to measure the number of trading days and number of calendar days. So you can just pull it to set it to 29 or 30 days and then go back and see what is happening like this, which is what I do. 29.53 days, is this coming? Then I just shift it. Okay, yes, I guys, if you measure from here, you got one more. So the point is, if say tomorrow you were looking at a stock and you were wondering if there will be a trend change, just go back 29.53 days or 30 days, between 29 and 30 days. I keep saying go back 29.53 days because that's a cycle, but you go back 29 and 30 days and see if there is a trend change 29 and 30 days back. If there is a trend change there is a high probability that there will be a trend change today or tomorrow. And you have to be on the watch out for that. If there is a trend change, you can very well jump into a trade on the opposite side. Now, another thing you got to notice or understand is when the trend changes, the initial burst of a trend change is always very sharp. So if you get in at the right time, or on the right day, you tend to make a lot of money in the very next subsequent 2 or 3 days. See, every time the market changes its trend, the rally post that or the decline post that is always sharp. Only when it goes sideways is when it goes up and down for a long time. And a sideways market always tells you that the earlier pattern is going to repeat. You should be more worried about V-shaped bottoms and A-shaped tops, but not be worried about this some of my students call it an F. It's like this F-shaped or a L-shaped market. It's not a question of worry because it is going to repeat the earlier trend. Now, see how it caught this bottom, caught this bottom. That is how it is. Now, here I'll pause the presentation. If anyone wants to pick up any of the any scripts to look into it, I'll go into it in detail. Yep. Anyone?
Okay, let us blindly take Asian Paints.
Nah. How much position you have?
In equity, nothing. I don't have any exposure in Asian Paints as such.
Okay, let me
Okay,
pull up.
and the significant bottom was 25th October 2021.
What was that? Significant bottom was 2021 October.
25th October 21.
Okay, okay, okay.
And I added your 29 days. Yes, I see a reversal.
This one, 25th.
Yeah.
Yeah. See. This is
So you went
58.
58 days. Go
No,
down.
I'm just still setting it up.
Okay.
Because
Mm,
you need a better software. Here,
okay,
29
let us
days.
take this guy.
29 days. What else do you want? Okay, now you only saw this. Okay, now take this.
Take the
What
previous
happened?
one also.
What
Take the
happened?
previous one also. That is also exactly 29 days. It is a reaction.
Look at this.
Acha, chalo, we'll change the example. Let's
Look at
take
this.
another
Look at
example.
this. Look at this.
Okay, friends, give me some tough example, friends. Okay,
There are
Veera
no
Raju
tough,
is selling HDFC.
there are no tough examples for me. HDFC Bank or HDFC
Let's take bank.
Bank? Take. Where do you want to take?
The top or the previous top was 18th October 21.
18th October 21. Here. Okay.
Yeah.
This one.
Yeah.
Simple, no. 18th October 21. October has 30 days. It will be 18th November. Okay. 18th
Yeah.
November failed. Add 10 days. See here. You had 18th October 21. Okay.
Correct.
Now automatically you get all these dates.
Okay.
All right. Oh, now, okay. 16th. Here is 15th November. Can you see the trend change here? You have already seen the trend change video.
You call that trend change?
Because last 3 days was up. I'll come to that when I talk about trading. You will need
Okay.
to see only the trend for the last 3 days. Because on the moon cycle, you're trading for 3 to 4 days. Okay, next is 2811. Here is 2811. You call this a trend change or no? Here, this one. Yes.
Yeah, 29 November. Yeah.
Yeah. Okay. Then you have 8th of December. You call this a trend change or no? Tough one. 16th
But
of
how
December.
do you call it? Okay, let us take this simple example. For instance, if you take 29th November 2021 on HDFC Bank.
Yes.
Okay. And
Okay.
When I apply the 29 days chart, it will come to 28th of December 2021.
28th of November.
Correct. 29th November to 28th December.
No, this is not a series of high-low sequence.
Okay.
This is not. See, because there are other
So you are
things.
telling take a significant low. That's what you're saying.
Take a significant low. Take from any low. You will see 29 days will work. You will see 41 days will work. You will see 51 days will work. First step. Then we will don't add too many things. Right now you are suddenly jumping into how do I trade without understanding the principle. I'll explain about how to trade later. First you understand the principle.
Okay.
Trading, we will come to it. Before the end of the presentation, I'll show you how to trade this also. The first most simple thing is, if there is a trend change the next day or the same day, you go short on the break of the low of the previous day or go long on the break of the previous day's high. Meaning if the market's coming down, previous day's high is taken out, you can go long. And if the market is going up, previous day's low is broken, you go short. Okay, we will come to trading later. First of all, understand that these numbers work. Now we are in 2022, where we are in what there is only 9th January 2022 and 14th January. We are here in this area. The market got caught since 9th January. Okay, did it break the low of the previous day? It only broke here. Truly speaking, I would keep a short here and go. I would keep a stop here and go short here. But then okay,
public demand. People are requesting ITC. Fazil is asking ITC.
Right. See, you can trade ITC. There is no problem with trading ITC. There absolutely no problem. That 29.53. You tell me where the trend change. It should be a V-shaped trend change. We can calculate from there. Where do you want me to put it? Here? Okay, here.
The significant top. If you ask me, ITC, I would say that significant top for me is on.
I have not done any.
I will take the top of 18th October 2021.
18th October 20. We're coming back to 18th October. It will work. Why it will not work? It will work, Baba.
Yeah. Yeah.
This is 18th October. Now this has to be adjusted because this is 29, this is 30th day. Worked or no? You can see 30D, 21 trading sessions, 30D. See, 18th October, 30 days later, 17th November. Okay. So you can even try this. This did not, this was minor. You may even want to try this. This is actually 33 days because there are more trading sessions. Here's 29 day. Worked? How far are we in time? It's 9 o'clock. Oh God. I have a lot more to cover. Okay.
Okay. Yeah.
See, this is the point. If you want to know more, you can go to my website, timingfinancialmarkets.com. I have a free ebook there. You can download it from there. You just need to put in your name and the email ID. You will get the free ebook. You can download the free ebook. It has got a lot more in detail. Plus, once when you download the free ebook, on the next day you get a detailed seminar which I have done on how to apply the moon cycles, which runs into almost 1.5 to 2 hours long, which is that is also will be given, and also you will also get the Excel sheet on how to use this with all the details on how to use the one. Okay, now let's move ahead because there is a couple of other things which I want to show, and then merge all of them together. Okay, should I move ahead?
Yes, sir. Please.
Okay, now we already saw this. Right now here I'm only showing the 29.53 days to keep it simple, but there are 21 days that you can get from any major trend change. And those 21 days, 18 of them, I have done a statistical study, between 17 to 18 of them will work each and every time. Come on, we have seen this. Now the next one is called price and time squaring. Price always has an element of time in it, or price becomes future time and time becomes future price. If you understand this concept very well, you'll be able to forecast future price where the markets will post before turning the trend. And if you understand time, then the price, you will be able to forecast the time. Now we will not get into forecasting price because that's a little complicated. Forecasting time is very easy. Let's see the video and then I will talk. And we will apply it on many of our own charts.
Most analysts and most traders disregard time and concentrate only on price and volume. The charts that we plot are in 2 dimensions. Markets, however, if seen from a different perspective, indeed exhibit a 3-dimensional design. We are so used and accustomed to seeing the 2-dimensional chart. The charts, however, are not 2-dimensional, and, if you can imagine freely and openly, you will start seeing the 3-dimensional view of the charts. It is practically impossible to plot it on 2 dimensions. See this animation here. From a top view as we plotted, it appears to be a 2-dimensional chart with price and time. However, the charts are anything but 2-dimensional. As we change our perspective of vision, a 3-dimensional shape emerges. Moving from a top view, as we move our perspective of vision, we can see that this is a limited vision. The charts not only unfold as a spiral in space and time, but also are measuring volume of the shape unfolding, not to be misunderstood with volume of shares traded. The calculation and forecast with volume of a shape is an advanced concept beyond the scope of this presentation. Let us dig deeper into the 2-dimensional charts to understand, and then move on to the 3-dimensional application. W.D. Gann said, price and time are interconnected. Present price reflects as future time, and present time reflects as future price. Let us look at how price reflects as future time, as that is a very simple and easy process to learn and apply immediately. Take the price at a swing high or low and project the number ahead in time as number of hours, number of days, number of weeks, and number of months. A trend change will be seen at those points in the future. Let us look at a chart to understand this clearly. Whenever a market misses a turn on calendar days, mark the number and wait till markets reach the same number of trading sessions. Markets will make a turn on one of these 2 days. As a rule, when markets square either in calendar days or trading days, it has to make a turn once, if not twice. I repeat, simply understanding this system thoroughly itself will make you a ton of money, and you truly do not need more. Go over this video again and again, till you understand thoroughly and have applied the system on at least 100 charts. The more you practice, the better you will get at understanding the markets. This is the only key to success. Repeat till this knowledge become a habit, and soon it will make you a very wise and rich person.
Okay.
Most analysts and most traders disregard time.
Okay. The point is very simple. Whatever be the price, you look that many hours forward, or that many days forward, or that many weeks, or that many months forward in time. So there was a presentation I made earlier. You can search from the YouTube. If you take the 2008 fall, which happened from the top to bottom, the range was 4,105 days. If you add 4,105 days to the top to the bottom of 22nd of November 2008, you will exactly get the date of 21st January 2020. So a price which was posted about 12 years back gave the exact top of Nifty 12 years later. So there's a whole lot happening because of which we study history. But for the average, for the regular trader, there you can use, just if you're trading Nifty or the bank Nifty, it is very simple to work with it. Somehow Bank Nifty doesn't respond very well to price time squaring, but Nifty does, and Bank Nifty responds very well to the moon cycles. So you have to make that differentiation. Some of them will not these rules will not work on all, but once once you see them working on any particular script or an index, they will continue to work forever. Okay, so the next question will be, Nifty is 15,000. So if you add 15,000 days, 18,000 days, you are going almost 60 years ahead. So how do I use that number, or how does it work? The point is very simple. First, you take the number and then you divide the number by 360 and use the remainder. This can be done easily in Excel or in a calculator which has got a mod function. It is called modulo operation or modulus. It is written as MOD. So you can just Google it or find it out. It's very easy. Or just divide the number by 360, and whatever remainder is there after 360 is the time cycle that is working on. How does it work? It is like this. Imagine a circle, and a circle has 360 degrees or 360 numbers on it, 0 to 359. Now imagine a needle on it, and the needle's moving. So this is the first time it works. So it is a price of 0 to 359. Now 360 and 0 are one and the same. So the second time will be 360 to 720. The third one, so what happens is whatever number remains after 360 is reduced is your time cycle. So you have 211, it will continue, and you can go up to any number into millions also. It will all come down to a cycle of less than 360. There are only 360 days, 365 days in a year. So you will get a time cycle which is well within the year. Many will ask a question, what if I get 355? I will have to wait for a year. You don't really need to. Go back in time and find out from there which dates are coming close to our time cycles. And once you work with it, you will be able to work with any number, however big it is, and you will reduce it to 360. That is mod 360. Now let us see one example. After that, I will take up the audience choice, and then I will go into the trading part. Now here's Nifty. The bottom here was on 24th March 2020. The low is 7511. When you divide this by 360, 7,200 is 29,360. So your difference is about 311. So you are looking at 311 days ahead. This is January 29, 2021. Do you want to see what happened on January 21, 2021? 29 January? You can pull up your charts and see it for yourself. You got a perfect trend change. This is price time squaring. Now this 311 days does not figure in the moon cycle. But since price and time is squaring, you get additional dates. So you can work on this basis. So if you have a smaller price script like ITC, you will get many of this type. So just take the low price or the high price and modulus it to 360 and project that any number of days, weeks, hours also. Hours gets a little tricky because the hour will fall on a non-market time. Mind you, we are always talking about time which does not stop. So an hour which falls during non-market hours may not show any trend change because that time period has passed and we don't have the market working. Understood? So now if audience has any chart requests, we will have a look.
Ankusham is asking for Tata Steel.
Tata Steel. Okay. Thank God. Let's take this, whatever is there. 15th August. What is the high? The high is 1534. Now mod 350 of 1534. Pull up a calculator. Is it 1534? Yes, 1534 on both the days. Now pull up a calculator. 1534 mod 360 is equal to 94. Pull up the date range. There you have 2 days working with the same number, so you'll have to be plus or minus 1 day there. 94. 94 day you had this down swing stop. It did not work. Sorry, where is 94? Now, if 94 doesn't work, you go to 94 trading sessions. Always the calendar day will come earlier than the number of trading days works. So this is how both the cycles have to be applied. If the cycle does not work on the calendar day, you will have to go to the trading days, and on 99.99% of the cases when the calendar day fails, the number of trading days will always produce a trend change. That said, don't jump into the trade just like that. Use your what you call money management principles, and then get into the trade when the market takes off the high of the previous day and keep a stop at the low of the previous day. And if you had got in on this day knowing that there is a trend change when the high was taken off, look at the speed it went 1000 to 1200, 1180, almost a 10% price move in 3 days. Anyone else? The most important point here to remember is when you are trading and the cycle appears to miss on calendar days, then actually I get very excited, because when the number of trading days come in, there is always a nice price movement there. Anyone else?
Kailash, Mr. SSV is asking for sale.
You take any one of them, they will all work the same. SAIL sale, Steel Authority of India. Here, what's the high? 151. You don't even need to use the calculator. 151. Go ahead, 151. 149, 150, 151 here. You understand the last 3 days the market was coming down, it'll put in a trend change here. Then you will also see on 151, do we have 151 trading bars? Here, 151, you have this is, if I don't know if what happened here, this looks like a spike top. Here is your trend change from 115 to 103. That's almost a 10% price movement. See, you have to appreciate, I'm not giving examples from my end. I'm asking you, you give me the stock, I will show it to you there. I guess that's done. So what do we do next? Next is how to trade. See, point is very simple. I always look for what is happening in the last 3 days. In the last 3 days, if the market is coming down, then I will look to go long. If the market has been sideways in the last 3 days, then I look at what action has happened before those last 3 days. If the market was coming down, and the market went sideways for 3 days, I will look to go long. So there are only two different differentiations. Is the market doing sideways or is the market having a trend on the last 3 days? Trend means unidirectional move. So if the market's coming down last 3 days, I expect it to change the trend. So if I'm going to buy, I buy when it goes above the high of the previous day, keep a stop at the low of the previous day, multiply the entire range of the previous day into 4, and that becomes my target over my entry price. So my risk becomes 1 and my reward is 4. So every trade that I take is around a risk reward of 1:4. Sometimes when you're lucky, it gives you a lot more than 1:4. It just runs away. You don't even have the time to exit. Does that explain? Ashok sir, it explains to you also why the time cycle appears to fail sometimes. When it fails on the calendar days, it will work on the number of trading days. That's one thing most people ignore.
Okay.
And you can even use this on an intraday basis, but intraday is not suggested because it gets a little complex because too many cycles are working on an intraday basis.
So there is
On
a
a daily-
request to take any commodity in your learnings.
Okay, what do you want? Gold?
Yeah, JP says gold.
Which gold you want? I don't think I have MCX. I don't even know what is the MCX code. If you have MCX code, I will pull it.
Yeah, you just select there. The MCX would automatically come there. It's there, no? Gold futures
Where?
MCX. The one below. Now next. Yeah. One above. No,
This
no,
gold
above.
mining. No, gold futures MCX. Okay.
Yeah. Use the continuous contract.
Continuous current month. Okay. Yeah. Why will it not work? What's the low here? 44108. 44108. Mod 360 is equal to 188. Take this, go 188 days ahead. Do we have 188 days? Here. You have 188, 188, 189. Okay, it did not work. Do we have 188 trading bars? I don't think so. Oh, you have. Here, take. What else do you want? Is that a trend change? Would you call that a trend change or no? See the beauty. And people are stuck. Why did the market fall today? That cycle was coming in. It has to turn. Nobody needs to give you an explanation. Markets are illogical. When the time is up, markets change the trend. That's it. This is what the great W.D. Gann said, and that is what I keep repeating. Don't look for examples. You find it very difficult to believe, but the proof is right in front of your eyes. You want to believe it, believe it. Don't want to believe it, don't want to use it. It's up to you guys. Anyone else? Or should we move? Okay, I guess this is done. So where are we from? Current slide. Okay, now this is what it was.
We can proceed further, sir.
There's no
We have
further.
30 more minutes.
They have no further. What 30 more minutes? You said 90 minutes. I have finished 90 minutes exactly. You can go ahead
Sounds
with
good.
your next one.
Okay.
This one.
Sounds good. 1 second, sir. Take a pause. Yeah. So,
Yeah.
Team Espresso.
Yes, sir. Ravinder here.
Okay. 1 second. Master Ji, can you run the YouTube ones before we proceed with this slide?
Okay. Yes, sir. Done. 1 second.
Investment in securities market are subject to market risks.
So, sir, can you move on to the slide? Ravinder, over to you.
Yep.
Yes, sir.
Coming.
Go ahead, Ravinder. Yeah. Next slide, sir.
Okay. Hello,
Yes.
everyone. My name is Ravinder Hundal from Espresso onboarding team. We are Espresso and we are committed to help traders. Espresso is discount broking company under a Sher Khan group of companies. We have a very unique offer for traders, pay when you profit. So as an intraday trader, you don't have to pay brokerage on loss-making trades. For more details, you can check our website myespresso.com. Today I'm going to talk about Bench, which is Windows-based desktop application designed for pro traders, best-in-class experience, real-time feed, multiple market scan, and many more. For more details, you can check our YouTube channel Espresso Invest, where we have demo videos for all features. Next slide, please.
Next slide. Yeah.
Yeah. Yes.
Acha. Move ahead.
Yes, sir. Next slide. Yeah. Keep entering. Couple of more entries because it is jumping again. Two more
Again.
entries. Yeah. Couple of more. 1, 2. One more. Yeah.
One. Okay.
Ravinder.
Oh.
Okay.
Ah.
Yeah.
Yes.
The previous one, sir.
The previous one. Yeah. Sure. One second. Yeah. Yes, please.
Yeah. This is one.
Yeah.
Okay, we are providing best-in-class charting solution for every type of trader and investor. As a trader, you do analysis, so you need on-chart or off-chart indicators. Yes, we have 80 plus studies in bench. We try to provide all advanced tools which will help you out to marking zones, lines, and complete your study. We also have chart compare, so you can compare any stock, any indices, or any contract with anyone. Also, as advanced, we provide percentage, log, and linear chart. Next slide, please.
Yep. Okay. Yes. Come on. Click. 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 Yes.
Okay.
One more.
Yeah,
That's
nah,
it.
this is fine. Okay. You know, prior to launch, we test all these features so that you can enjoy, as Hart said. So you should not face difficulties. We always want you to provide cutting edge technology with smartest features in industry. So we provide smart and simple ways to trade from chart. You can set everything before opening order window. Most of functionalities are auto save, so you don't need keep track. Next time you can open chart with the last actions and studies added in chart. So for more details, you can visit our website myespresso.com. Thank you everyone.
It's Ravinder, is it?
Yeah, Ravinder
Yes, sir.
Hundal.
Ravinder, this is Anant Acharya. Maybe I would like to get in touch with Kalyan Raman if he knows me very well. Tell him Anant Acharya from Udaipur. So,
Okay.
yeah, or if you could give me his number, or you can ask him and share the number.
Sure,
Ashok will
sure,
give you
sir.
the number.
Sure.
Yeah, okay. Thank you so much.
Thank you.
Thank you, Ravinder. Sir, over to you. We can move on to the Q&A slides. Hello,
Q&A.
friends.
Oh, हम तो question and answer में आ गए. No problem.
Please shoot your questions.
Ask. Toot. Yes, please.
So go ahead, friends. We have another 20 minutes to go. I would be in a position to take at least 10 questions. Go and shoot your questions. Okay, here is a question by Mr. SSP. Can we use multiple of MOD?
What do you mean multiple of MOD?
SSP, can you please elaborate? Okay, here is a question by Sri Nair. Sir, I understood your date calculations. Could you please explain the trade execution? What could be the entry rules and exit rules?
Okay, very simple. I did say that, but let's lay it then. I look at the last 3 days action of a script or an index or the market. Okay, whichever one you are looking to trade. You just see what has happened in the last 3 days. There are two things which will happen. Either the market is coming down or going up, which is a trend, or the market could be in a sideways mode. If the market is in a sideways mode, that sideways mode could have been however long, doesn't matter. Just see what happened before that sideways move. if before the sideways move market was going up, there is a very high probability that it will take a breakout to the upside after the sideways move, meaning whatever trend was there before the sideways move is likely to repeat. So you look to go long on the trend change day or the next day whenever the high of the previous day is broken. Then we'll keep a stop loss at the low of the previous day. Okay, and we use the range of the previous day as our multiple. We multiply that range by 4 and add that number to your entry price. Then you will get a 1:4 risk reward ratio trade. If the market is changing is in a trend in the last 3 days, then if it is coming down, you are looking to go long using the same principle of buying above the high and keeping a stop loss at the low of the previous day. Or if it is going up, then you expect the market to go down and you keep your stop entry at the low of the previous day and keep a stop at the high of the previous day. Is that clear?
Sounds good. So let me move on to some more questions. Sir, question by Ajay Sharma. What is the
Yeah.
difference between mod and moon cycle of 29.53?
See, mod is basically you are taking the price to give you a irrational time cycle, which has got no bearing with what the moon cycle is. The moon cycle is a fixed cycle, which is a basic planetary cycle. The mod cycle is actually taking price itself. Now, truly speaking, if you want to get into the detail of it, when we actually count the number of days ahead, what we are actually doing is we are calculating the sun's angle or the sun's price movement. The sun, that is Surya, he moves 1 degree a day. So when you move ahead 311 degrees or 200 degrees or 300 degrees, you are actually using the sun's cycle to get the trend change effect. Is that clear? So the moon cycle is working on its cycle. The solar cycle is working on the solar cycle. So basically, all the cycles that you see in the market have a planetary base behind them. Clear?
All right, sir. Okay, here is one interesting question by Mr. Sanjeev
Yeah.
Gaur. He says, can we apply price time method in Forex like GBP USD?
Yes, you can. Yes, you can. You just need to move the decimal place one step or 2 points left or right. For example, let's take euro dollar. The euro dollar trades at 1.2, 1.12 or 1.12. So move the decimal place to get a 3-digit number. You get 112. Okay. Then you use that 112 to get the cycle. It will work. And if you still want to change it, you can move it one more decimal place. You will get a 4-digit number, mod that into 360 and use that number. There are a lot of subtle methods. From any high price, I get almost about 27 to 30 different kinds of trades or different time cycles. It takes time to understand all of them in depth, but yeah, from one price or high or a low, you can get many trades. This was just an introduction to the time cycles.
Sir, there is one more interesting question here.
Yes.
You are talking about 29.53 day cycle. Can I treat
Yes.
that as a period and apply it on intraday and apply it on a 29.53 period instead of days?
Yeah, if you want to lose money, you can. And I've already said that this will work on days. It will not work on other things. The moon cycle will only work on days. The solar cycle will only work on days. The Jupiter cycle will only work on weeks. The Saturn cycle will only work on months. So there's a difference. I will not get into the intraday because intraday is not so easy to do it.
Sounds good. So Chandan is asking, sir, what is the foundation of this theory? Who invented this? What is the rationale?
There's no answer to this, my friend, because if you go back to Hinduism, it is there. If you go check the Bible, it is there. If you check the Jewish Torah, it is there. All of them are actually basically talking about the sun's movement and the effects of it, or rather the planetary movement and its effects. So sometime back I tweeted, if you remember, even Ashok, I'm sure you must have also, Dashavatara is the precision of the equinoxes. If you remember, yeah, all of them are basically talking the same thing. Where has it come from? We don't know. I would only say in the ancient times, those people had no other entertainment, so they were looking at it and they found some synchronization and they made it into a wonderful science.
So a question by Mr. Ame Parmati. Sir, which is
Yeah,
best here, moon method or mod method?
it would be better to use both because the moon methods will give you some trades, the mod methods will give you additional trades. But truly speaking, if you're just beginning, you just look at 29.53 days for a few days. See if it is working. See if it appeals to you. See if you are able to catch the trends yourself. Then, when you are interested, you can dig deeper. This is just the tip of the iceberg. The iceberg is too big. It will take you the next 5 years to 10 years to understand time cycles completely in depth.
I believe stock market is an industry where there is no end for learning. We need to keep learning, innovating until we die.
Yeah, true. I agree. 100%.
Okay. Shiva is asking, sir, can you please once again re-mention the site address where we can download your ebook?
Okay, here it. 1 second. Here it is. Oh. This, you can take your mobile and take a picture. Oh, .com has come 2 times, is it? Okay. Timing final, only one .com. Timingfinancialmarkets.com. There's a free ebook that you will get the access to the YouTube video because that is marked as private right now. So only those who download the book are getting the access, and then you also get the Excel sheet, so you can work on it. Truly speaking, it's very easy to make the Excel yourself.
Sounds
Any other
good.
questions?
Okay, so friends who are asking for Excels, I'm going to send those Excel by the end of the conference. All these details would be also emailed to you. Don't worry about that. And also we will publish those documents in our Telegram channels. Okay, yes, I could not share the details of the bot. We'll try to do it tomorrow. And broadcasting team, please remember tomorrow we need to share the bot details in the PPT. I will try to insert it as well. Okay, sounds good. Okay.
Thank you, everyone. I had a wonderful time. I hope you learned something new and something different. All the best. And may your trading
Great.
never be the same again.
So with this, we come to the end of the session. Mr. Anant Acharya, thanks for your insightful session on time story. On behalf of all the participants of Nifty Banker 2.0, the Money Control Pro team, the Espresso team, and all the family members of Traders Gurukul, I extend our warm and sincere regards and gratitude for joining our event and sharing your interesting knowledge to all our participants today. Thank you very much, sir.
Thank you. Good night.
So friends, that's the story for today. I hope every one of you enjoyed the show. I will look forward to see you guys again tomorrow at 8 p.m. sharp with another interesting session from yet another interesting speaker. Until then, signing off, Ashok Devanampriya from Traders Gurukul. Good night.